Hi everyone, and welcome to another edition of the Crypto Club and Digital Assets Weekly Catch-Up on Zoom. It's 25th of January 2026, so we're already nearly 1/12 of the way into the year. So what's going on in the crypto world and blockchain? Well, let's dive in and find out.
How are you doing?
Hello, I'm good, thanks. Looking forward to see who shows up and if we get to hear of anything new and interesting this week. There does seem to be some stuff picking up in the crypto space of late. I noticed Ripple and RLUSD, I think it is, which is like the Ripple Labs kind of stable coin, I think.
Right.
And there's some talk about them adopting that more and more as opposed to XRP, which is interesting. I've not dug too much into it yet, but I thought that was quite an interesting thing the other day.
I don't follow Ripple that much.
Okay. Yeah. Well, I find it fascinating because whilst everyone is sometimes looking at like the pure play cryptos like Bitcoin and Ethereum, it's actually the application in the business world I find interesting, and that's where Ripple Labs have done a lot of work with banks and that to establish relationships and quietly develop things. So I kind of keep an eye on Ripple occasionally because I think that's where the magic's going to happen.
Yeah, I think a lot of what's going on now, we're going to ease towards stable coins.
Yep.
Quite honestly. I just think that's going to be the way that they do international settlements. But
completely agree. And I think for the banks, it offers advantages. You know, it simplifies the process, it reduces the costs and everything. And I do wonder if we'll kind of like get a backwards adoption that if the banks use it for like inter-country settlements and large volume things, you get
intra or inter.
Intra is probably the right thing. So within and between, but I think it'll grow to inter-company settlements as well.
Break over split.
Yeah, and I think over time you're going to see institutional adoption for that. And once it becomes a little bit more normal as like an internal payment scheme, it then becomes more acceptable for external as well. So I think you're just going to find that companies will adopt it without almost realizing they've adopted it. So I think that'll be interesting. And that also then means that the whole concept around crypto should become more comfortable as a concept for people. And so certainly for
basically, it shouldn't even be noticed by people. Just the fact that you sent it crypto, who cares?
I completely agree. I've always said it should be the payment rails that you don't notice.
Yeah.
The other interesting thing as well is if you think about from a consumer perspective, we're now all familiar with banking apps, which are effectively wallets on a mobile phone, where we say, log into this account, pay to this account. Well, there's no reason why you can't use that same approach for log into this wallet and pay to this wallet. And a wallet and a bank account's kind of synonymous from a user point of view. I know from a technology point of view, they're quite different, but the behavior is kind of the same. I've got some funds here, I want them to be over here. So, yeah, I think it may well be that 2026 is the year of quiet adoption. So no big shouting around and that. It's just people simply start using it without realizing it.
Yeah, I think if the banks use it and then they're able to extend it to commercial and domestic users or residential users, whatever you want to call them, then it just becomes a de facto. And the fact that it got sent in the USDT or USDC or whatever the stable coin is, who gives a damn?
Exactly.
Did mum get the money? That's all I need to.
Exactly right. And it's when you use products like Revolut, for example. Revolut, I used to use quite a lot traveling around the world, where it got to the point where you didn't even know what currency you were using. All you knew is you were handing a card over and your payment was made.
Right. Yeah, they're offering crypto services in the UAE. They've just been approved. Yeah, I was just checking what was going on in the Middle East as we were getting into that.
Excellent. Hey, and Ray's come back as well. Hey, Ray. We're just talking about almost stealth adoption of crypto this year through stablecoins, and how it is that I'm seeing in the news about Ripple in particular, some stuff going on there. I do wonder if 2026 is going to be the year where we're going to see banks using stablecoins for like intra-company and intra-country settlements, and then we'll see a growth from there.
Well, in a way, maybe. I've got some inside knowledge. I was approached directly by HSBC. So they have digital assets and currency department.
Can I just check, is this okay to leave this in the recording?
Yeah, I mean, I think it's a generalized commentary.
Okay.
I mean, I didn't go any further with it because they realized I was perhaps too senior for the actual role. But I think the interesting thing is in the calendar of seminars in 2025, the London blockchain, I think, had, memory serves me right, JP Morgan and UBS as speakers. And I went to one other seminar and there was another bank there. I think it was Standard Bank. The banks
Standard Chartered have done a fair amount.
Right, yep. The banks have been publicly so low key that they've been using existing staff who sort of transferred into their digital world. Yeah. And I was quite surprised when I got a phone call. So one, I think the banks are aggressively looking to a digital world and they're being more public. So, crypto, stable coins, the digitalization of equity, bond markets, etc. It'll be interesting to see what 2026 brings. I think we're on the cusp of some exciting stuff. God knows now what the geopolitical world of what we're seeing, Mark Carney's speech, etc., will do to the digital financial world, but it may actually drive it faster.
Yeah. Well, it's interesting you mentioned Standard Chartered because I remember a while ago this company, a UK company, in fact, called Zodia Custody. And Zodia, from what I recall, were backed by Standard Chartered and had several people who were ex-Standard Chartered. And I think they're building that relationship further now. And I think Standard Chartered have realised that crypto custody is an important area, definitely. And I agree. Everyone keeps thinking about crypto in terms of using it, trading it, and all this kind of thing. And no one thinks about how you're actually going to securely store it. And the default tends to be at an institutional level, something like Fireblocks as a product, which tends to be, as I understand it, quite expensive and quite complex. And so I think there's going to be a growth in that area. But you're right. I was at a conference several years ago where I'm trying to remember there were two companies there, and one of them was JP Morgan, which was interesting because it was around about the time they'd launched JPM Coin, which was their kind of like internal experiments. And the other one was, again, I think it was quite a large US investment company who were quite surprised that I knew they were doing crypto, because this was a traditional kind of banking financial services event. And when I said, "Oh yeah, you're one of the ones who've launched an internal crypto for your staff," it's like, "How did you know about that?" So yeah, I think you're right. They've all been exploring this for several years. And it's just gradually getting.
Speeches at the London Blockchain Conference by UBS and JP Morgan were basically saying that they had quite a large number of staff working on this. Obviously, Trump's position and ripping up of Biden's executive orders, banging the heads of the SEC and the CFTC together, has sort of given the impetus that the regulators need. And I think, and I'll put my head on the chopping block, I think that combination of US economy, US Treasuries, Bitcoin, and now the US really accelerating. Perhaps the UK being left behind, the UAE, you just said approving Revolut. There is a momentum enough perhaps for the banks to come out, because I am from a corporate investment banking world, or was, I'm now in digital. There has to come a point where the banks commit, or they just miss the boat. Obviously, they can go around and, buy a custody firm that's already done the hard work for a silly amount of money, and that will happen undoubtedly. But for my phone to ring, and I've had another call from New York and one from Poland, that's in the last 4 or 5 days. So there must be movement afoot. Obviously, it's the new year. Classically, with the banks, everybody shuts down for Christmas. Nobody wants to destroy the year-end numbers. The budgets are set. They're approved rolling into the new year. So they've been approved now. And immediately everybody wants to look at, firstly, the results in the first quarter of the last year. But at the same time, I've never been on a trading floor where everybody just want to put a good number down for the first quarter. So when you combine all of that and budgets set, I think the digital world, it's time now. Stablecoins for forefront, tokenization, real world assets. It's all there. It's what's going to accelerate it into the established markets outside of regulation that says it's a security or not, how you treat it on your balance sheet, etc., etc. So I was
going to quickly offer as well. The other thing I've noticed, it is like kiddies in a sweet shop with the new latest shiny toy type thing. That I think a lot of banks did take an interest in, the capabilities of blockchains and digital ledgers, capabilities of crypto and stable coins. And I think a lot of them have kind of moved their focus onto AI. And the impression I get there is that whilst there's been a degree of adoption and success there, they're again currently going through kind of what Gartner describes, the trough of disillusionment, where they've put loads of investment into generative AI and now agentic AI, and they're now not quite getting the returns that they'd expected, as they'd gone in without thinking through what the use case was or what the business justification was, and now they're kind of rolling back a little bit and going, well, okay, we thought agentic was going to be the next big thing, but maybe we go back to some crypto things. I think maybe they're just spreading the bets a little bit.
Well, from my perspective, in the world of risk, the banks have always been in this catch-22 situation with budgetary development of in-house systems, because they've got legacy systems that don't talk, systems that do talk, but there's manual intervention. The day of the Excel spreadsheet it's still around, which is a crazy position. But from my perspective, I was singing the praises to a degree of AI, where you can use it as a data cruncher, which the banks have never really done before from a risk perspective and a regulatory risk perspective and a money laundering perspective. A lot of the MROs who used to report to me would do their annual report, which is a regulatory requirement. And I'd say, it'll take you a quarter out the calendar to write. It'll be somewhere between 60 and 90 pages. But I'd really like an executive summary right on the front that gives me something like 5 lines, and actually then plan for the rest of the year to focus on. When you look at the data now, market abuse sat with the compliance department. It now sits with the financial crime department. And I think the simple reason for that was the regulators realized that, taking a trading platform as an example, it's the business that owns the data and has it all, not the support group, and certainly not the risk department. Giving that money laundering reporting officer the power to say, I have to have access to the data to do market abuse, meant, in basic terms, everybody was plugging little leads into all these systems. But of course, then you get a flood of data. And that's, for me, where AI was a real win, because you could just run it through and ask it to do all sorts of stuff. But I'm old enough and wise enough to know that when I came into the city, there was no such thing as a Bloomberg.
But I get it from a technology practitioner, because I still get my hands a little bit dirty helping source out the data plumbing in organizations at times. And it does still bother me, going back to like the legacy systems and that. So, some companies have still got COBOL-based code. Some are using AS400s, which aren't the easiest things to talk with. Some of them, as you say, have built Excel empires, this kind of thing. And the thing that troubles me is that I'm seeing companies who are using AI to avoid solving the problems. So I've seen it in the past where people have said, "Oh, we've got an old AS400, so we'll put a graphical wrapper on top of it. We'll make it look Windowsy and nice and modern, and behind the hood, it's still using the old RPG code and that." And then we had APIs, which at least allowed us to get the systems to talk to each other and that kind of thing. But I'm seeing that there's now exploration of using things like MCPs, which is like the AI equivalent of an API, of automatically getting systems to talk with each other without designing a proper schema and all this kind of thing, and interrogating Excel spreadsheets and extracting all the data and all this kind of thing. And it sounds wonderful until you realize how AI works. And then you realize they're heading for a really bad situation of trusting the AI to figure stuff out when conceptually it doesn't have the capability or intelligence to figure stuff out. It's just pattern recognition. This looks like it should be this. It looks like it should be this. I did some work last week using, what was it, Gemini, Claude, ChatGPT, and Microsoft's Copilot. I'm just doing a cross comparison of them between a particular exercise I wanted them to do. And it was interesting because it was just like, go away, find some information, consolidate it, produce a table, but include a link in the table to where you got the information for each row. And I found it intriguing because I think AI has gone downhill since when I was using it a couple of years ago. It's regressed. Because I found ChatGPT downright refused to do the task, but said, if you want to work this out, here's the set of instructions to follow. And then once you've done that, I'll help you format it. I think Claude looked really good. The first few rows were spot on. And then it went downhill. It started repeating itself all over the time. Gemini, when you clicked on the links to the reference data, it was hallucinating. And it's just like, I thought all of this had been resolved now. And people are beginning to run, as you say, like risk models and all sorts, trusting the data, because we didn't bother putting this into a database. We just got AI to interrogate the Excel spreadsheets. So I think I feel quite sorry for risk officers and all this, because I think that the businesses are potentially exposing them quite badly.
There's a lot of things that are wrong with AI. I mean, I'm developing an app at the moment with someone in the UK, and we're across DeepSeek, Qwen, Claude, and so on. And what happens is we found, one, it has no sense of humor. It does not. It was not trained on humor at all. Two, it wants to pass wording that we've just got from it. If you put it in again in a different situation, you've moved it to the left or to the right, then it will pass what it's just done into something totally unintelligible and come out with something else that you didn't really want. And so the prompt engineering is important, but even then, if you're very disciplined and you've written 2.5 paragraphs of thou shalt not do this, thou shalt not do that, it's still as the English say fucketh up.
Yeah.
You know, I mean, it is definitely worse than it used to be.
Yeah, and it's
people relying on it. It's gone downhill, as you say, Gary.
Yeah, and I find it interesting. I'll hold my hand up because I'm always confident enough to make predictions, and I'll stand by them even when I'm wrong. And one of mine was about prompt engineering. That when it first came about, I said this is going to be the shortest lasting career ever. Because when you think about prompt engineering, it's not actually you teaching the AI how to do stuff better. It's the AI telling you how it wants the stuff in order to get a better response. And if you can get better responses by writing better prompts, and that is done methodically and procedurally, then there's no reason why the prompts can't be generated by the AI itself. And so
you would think,
yeah.
It doesn't though.
I agree. But what I found is quite good is I'll get one AI to go off and write a prompt for another AI now. So I'll go into Gemini or something, tell Gemini what I want to achieve, and it will write a 3-page prompt to put into Claude in order to generate the results. And the good thing about that is it then means I've got a 3-page template. That it's a bit like having the HTML for a website. It then allows you to tweak bits and pieces, and you suddenly think, hang on.
But the problem is, if you take that over to DeepSeek and say, this is a prompt that's just been written by Gemini or by whoever, it comes back and it just blasts the heck out of it, saying this is totally inadequate, you know, this is laughable, and we've done it. I mean, it's like, whoa, DeepSeek doesn't think much of you.
Yeah. But it is as though there is that inbuilt bias against other products, because I've noticed that the number of times you'll write a prompt and the AI will respond with, that's a really good question to ask.
Oh, because all AIs satisfy narcissists.
Exactly right. It's automatically pandering to ego mode.
Yes.
But you're right. But as soon as it realizes that it's been written by another AI, it's completely disparaging and says, this is useless. Why on earth did you? And it's almost as though it's a bit like asking a Renault dealer how good they think a Vauxhall is, kind of thing. It's like, it's not going to work.
Right.
Yeah. So, Stuart, you were saying there's a number of things going on then.
I was going to say Ethereum has got itself into a corner. Basically, because it wants a lot of people like BlackRock and institutions to use it, it has to go into the KYC, AML gateways. The problem is that goes against the original ethos of the core crypto mission of Ethereum. So what are they going to do? Take the money and look the other way, cough politely, or are they going to put their feet down and say, no, we're not going to deal with the Black Rocks of this world? I think I know the answer without
the volumes that could result from an institution or institutions, multiple, like BlackRock, is not insignificant. So to say you won't or just ignore them is almost, surely that's biting off your nose to spite your face in a developing market. That's an interesting position.
Yeah, it's interesting what's going to come out of that. And then the other one was on Bitcoin, where there was an opinion expressed, which I delved into a little bit more, and that is that it said boomers or the boomer generation are holding ETFs, and that's what's keeping Bitcoin stable, because if it goes down 30-40%, they'll sell a small amount or buy a small amount for trading purposes. Price comes up and keeps it stable. But if the boomers decide to cash out at some point, it's all over.
Well, I think wasn't that the concern a while ago that with the launch of ETFs, it carried the risk that because the institution had to effectively hold crypto in some way, the ETFs could affect the stability of crypto for that very reason, that, you know, people would exit and everything. Because the concept of having a synthetic like an ETF's quite good, because it means you don't need to understand crypto in order to have access to crypto, which is sad but good, you know, in my thinking, because crypto's still unnecessarily complicated. But there was always this thing that if all of a sudden a high percentage of crypto is held by Fidelity, by BlackRock, by all the big players now, that you do carry that risk of being exposed in some way. So,
especially if it's pension funds and you start getting the retirement pulling out, you know, when they hit the 70 mark or 72, whatever the number is, and cashing out on those. That's going to leave some big holes, but who knows? And the other thing that happened was that Google last week quietly dropped Universal Commerce Protocol.
UCP. Okay.
It's going after Amazon.
Okay. So tell us more what UCP is, because I've heard that term a while ago, but not for a long time. What's it achieve?
Well, my understanding is it's a universal commerce protocol, which is used for commerce, which Google will force through by brute force. If you want to do this, you have to use that. And that'll be insidious the way it creeps up on it.
Okay.
I know nothing about that. I haven't delved into UCP at all.
Okay.
You're looking for an article on it? It dropped on Wednesday, I think it was.
Okay, there we go. While you were chatting about that, I thought just do a quick Google search on it and see what I could find. So here we go. Yeah. UCP, open standard for future of commerce, blah, blah, blah. Yeah. It is one of these things that it looks really good in terms of providing integration capabilities for like merchants and that kind of thing. But is it optional? It is one of those things. I do wonder if they're going to bed it in with all of the rest of the Google stuff.
There you go. Embedded checkout.
Yeah.
All you have to do is have your Gmail account. Yeah, I know.
Yep. Oh, that's an interesting one.
That's why I said it was more about insidiously creeping up.
Yeah, yeah. But then you see that with other things as well. I've noticed that more and more with, again, on the AI side, with the likes of Copilot with Microsoft. That Copilot's pretty much baked into every Microsoft product now. You can't escape from it.
It's useless, though. You know, I mean, talk about products. You've got Teams, which is the most awkward program that they've developed, apart from Windows XP. And, you know, I don't know what they're trying to do at Microsoft. It's second rate. It doesn't work. It doesn't address user needs.
I think it is interesting. Teams is basically Skype gone wrong.
Yes. Very wrong.
Which is a shame. So we'll no doubt see something similar happen to LinkedIn soon enough as well, because I seem to remember they acquired that. Anyway, I'm going to welcome back Elena, because it's the new year. Hello, Elena. And JT's joined us. And Bruno's just joined as well. Hey, Bruno. Go on, Elena. You can carry on saying hi.
Hi. So do you think it is good or bad that there is Microsoft Copilot in every Microsoft product now?
You're probably too young to remember Windows Clippy, which was a little paperclip when you open Microsoft Word.
Yeah.
I am too young, but I do remember.
And in a way, it almost feels like Clippy 2.0. It does have some, I think, genuinely quite impressive capabilities. The way you can just give it a script and say, write a PowerPoint presentation for me, or go and search my emails and do a summary and all this kind of thing. But when you look at what Google's doing with
only if you use a Microsoft product.
Well, yeah, but exactly, you get the same with Google. That you can integrate Gemini within the Google platform. You integrate Copilot within Microsoft, and I think it's very good at stopping people thinking for themselves. Which
do people actually think before they act?
In the old days of COBOL. Yeah. So I think it's got some good things. What I found really interesting, because I did do a load of Copilot training recently, and it's fascinating. The training very much explains how you can get rid of managers. I think I said that a few weeks ago, because it goes into how you can do things and how you can get it to build up packs of information and how it'll summarize and that. And it basically seems to be getting rid of middle managers. So it could be good. It might not be. I just want to quickly go back as well, Stuart. You were talking about Ethereum before, because the other news item about Ethereum, I think it was within the last week, is about they're actually setting up a security team specifically to look at quantum risks.
Yes.
And to make Ethereum quantum resistant.
Quantum proof.
Yeah. Because realistically, again, I don't think you can make something completely proof, but you can make it resistant. But that's no different to a blockchain where people say it's unbreakable. It isn't. It's just when something goes wrong, you know it, because it's
and everyone knows it worldwide.
Yeah, we're trying. It is amazing. It's really, really good. But it is like having a lock on your garden shed, where the only thing it does is you can see that lock's broken type thing. It doesn't stop the shed being emptied. So I thought that interesting. So Ethereum seems to be doing a few things lately. The Ethereum Foundation's announced that with the security thing. And as you say, I think they're trying to figure out the organizational ethics, maybe is a way of describing it, around working with big institutional players and that. So we'll see. And JT's come and joined us as well and staying very quiet, which means he's having his tea.
Well, it's not 11:54 yet, is it?
Is it like the last 5 minutes of the Cinderella's party type thing as JT when he magically appears with the has anyone heard about this? See, he's staying quiet now as well. He's not rising to the bait. So was that it then, Stuart? Were they the three?
That's about it. And then the other announcement that I saw, and I forget which ones it were, blockchains have laid off quite some considerable staff, the top 4 or 5 blockchains.
Okay.
I don't know what's behind it. I do know that the operating income that they're getting is not sustainable, or will not sustain them in the longer term. I mean, most of them are burning through the cash that they got from investment at a great rate. Okay. I'm not seeing a growth in blockchain usage either.
Well, it's interesting as well. I think the likes of Solana and Cardano, who are like blockchain layer 1 solutions, that they're still building their community. They're still doing lots of things, but I'm not seeing those things turning into commercialized products.
They're not out there talking to the end user.
Okay.
Or if they are, they're very, very low key. They tend to be very insular. We've got a solution, and this is how you do it, and it's like, no.
Well, I think that's often been the case, hasn't it? That they promote themselves as platforms and capabilities, not end solutions. I think that's right. That they're positioning themselves as that foundational layer upon which you build things. And it's kind of like promoting yourself as an architect as opposed to a builder, as opposed to a plumber type thing, or bricklayer. There's those different levels. So any other news from anybody? What else is happening in crypto and AI and emerging technologies, as I used to describe it, where it's all emerged technologies now? And anything going on in the metaverse world, Lena? Heard anything? No, all quiet.
To be honest, all quiet for me. Well, at least for me.
Fair enough. I've not seen any recent announcements of anything exciting, so yeah, it's all gone quiet.
Well, hi guys.
Hooray!
Ethereum launched. I think it was 2 million or 3 million. I can't remember. A quantum defense team, so they are already preparing.
Yeah, that was the Ethereum one, wasn't it?
Yeah.
Yeah.
So that's one of the things I noticed. Which, it was expected. There's quite a few blockchains that this year are going to work hard on it. It's getting closer, closer and closer. There's all sorts of people doing some big research, so that's going to accelerate fast, I think.
Yeah. There you go. I've actually got my finger on the pulse there, because I mentioned that before, and it was only announced on the 23rd, so a couple of days ago. But yeah, it's something that they certainly needed to do anyway, because I'm sure credibility-wise, everyone's going to be worried about the advent of quantum and what it's going to do to cryptography as it stands at the moment. So particularly with ECDSA, which is one of the main things of securing wallets. So, okay. Certainly an interesting one. And JT, have you heard about the latest on Ripple? I was saying to Stuart before, there seems to be some developments on that at the moment.
No, not really. I don't track shit coins.
It's more. I find it more interesting with Ripple about actually looking at what Ripple and Ripple Labs are doing rather than what XRP is doing. So
no, I haven't tracked. I really don't know what's going on.
Okay, because I thought there was something in the news recently about what they were up to. But okay, I know.
What I've seen was, I think it was BNB. An ETF for BNB was launched this last week. That's very interesting, I can't remember who it was, but it is. I think it was Grayscale, if I'm not mistaken.
You are indeed correct. I just found it on Binance's page. I'll see if I can.
That's very, very interesting. If Grayscale is now doing it.
Yeah, well, that kind of goes.
I have my suspicions Binance might return to the US soon.
Okay. Yeah. Do you think they might return to the UK as well?
Now you're asking too much.
Well, I find it interesting because Kraken have got a UK crypto asset registration now. Because I thought they'd withdrawn, but they actually came back and I didn't realise that. But yeah, it'd be interesting if Binance did. But yeah, Grayscale joins BNB ETF race. So what does it say here? They filed a registration with the SEC. GBNB sounds more like a British thing. Okay.
Yeah, and there was also one of the things I remember. There was also, I think, Tether, how depends where you are. Froze. I think was 180 million USDT on Tron network.
Okay.
We don't know much. I think it was just what was published by the different outlets was something to do with scams and hacking and so on. So that's
Yeah, again, $182 million.
182, yeah, okay.
Across Tron wallets.
Yeah, there's a lot of people using Tron, and I think there's a lot of stuff that's going there that probably not.
Okay, but this is always going to be the challenge with any stable coin, isn't it? That ultimately there's always going to be a mechanism for a central authority to freeze things.
If you think, well, what stable coin is, USDT is just a smart contract. It's a smart contract on Ethereum, on Solana, on whatever, yeah, whatever the blockchain they want to operate on. They deploy a smart contract, and that allows them to mint the USDT. As they have a mechanism there to basically blacklist any wallets that they want.
Yeah.
So that's what they've done. They just blacklist the wallets. They had whatever, 180 million. That brings a lot. There's a lot of discussions going on. Is this going to be good for the future? Not. My perspective, yes, I think it is. It's a stable coin. It's not Bitcoin or any other token, but I think we're going to see more of these.
But it is interesting. Again, it goes back to that whole thing that stable coins effectively are decentralized solutions that aren't decentralized in terms of their governance. So they kind of go totally against the principle.
Yeah, I mean, it is running on a decentralized blockchain. Okay, so, well, question marks on Ethereum being decentralized. That's another discussion. Okay.
Well, it's always the thing as well. People always confuse the word decentralized, and they don't realize it's not necessarily the execution that's decentralized. The execution is usually distributed, i.e. it runs across multiple computers, but it's the governance of the blockchain that is decentralized in the likes of Bitcoin and Ethereum. Whereas if you've got a central authority that controls things, which is exactly what you get with any stablecoin, then it's not decentralized because the governance is controlled by the organization, whether that be, as you say, with USDT Tether, Circle with USDC, and so on. So, yeah.
Yeah, the decentralization of blockchain is just to give all of those, or should I say, properties or whatever, features that you expect, yeah? Security, if it's decentralized, yeah? Is still decentralized. Let's not forget that, okay? It's just that the smart contracts and the governance smart contracts for stable coins are centralized. So yeah, you're absolutely right. But it doesn't mean that the blockchain is not decentralized and its governance and everything. It is properly decentralized, and well, we can discuss many things about the Ethereum, if it's truly decentralized still or not. But let's take it is, yeah. You can't remove that. It is, all of the features of a decentralized blockchain are there, yeah. It's just that governance and the smart contract is not a DAO. A stable coin is not a DAO, right? So,
and I did find it interesting. Vitalik, who's one of the founders behind Ethereum, is arguing for more decentralization. Yeah, so he's got what I would argue is the right idea about we need to decentralize rather than centralize. But anyone who remembers the DAO, as I think you alluded to there, will realize that the fact that a decision was taken several years ago, which kind of overrode a lot of other people, kind of proves it's not decentralized because it had a centralized governance function. So, but that's probably something that many people have forgotten about now, and the mists of time of blockchains of old and everything, and how blockchains could get rolled back many years ago. So, oh, well, if there's nothing else happening and no one else has got anything new, I might as well just close the call off a little bit early today.
I have more.
Oh, there we go. Excellent. Well done.
Do you guys see the deal that the Trump organization did with crypto.com?
No.
Trump Media and crypto.com partnered.
Okay.
And there's a lot of eyebrows on that one. To be honest, I really don't know much about it. I just remember reading something about that, but it was like just very quickly, I can't even remember what it was about.
Was it about them dropping some crypto tokens?
I think it was something to do with sports wages, I think
Trump Media plans to do an airdrop of tokens.
No, it's not.
That's different, isn't it?
No, it's crypto.com and Trump Media partnership, if you Google like that.
I took a look at that and it didn't come up with anything. Maybe you're just ahead of the game a little bit.
I can't remember what it is exactly, but
how recent was that?
I think it was early this last week. Let me see if I can find.
Oh, there we go. Found it at last. We got Trump Media and crypto.com. There we go. This is great. This is a bit like how I was talking about prompt engineering, of getting an AI to generate a prompt for you. We've now got it that JT writes my Google queries for me. So Trump Media, Trump deal raises eyebrows. Yeah. Outflows, that's approaching $1 billion. Okay. So it's this one here then, about Trump Media and crypto.com. Is it just that they're working together a bit more on sports wages and that?
Yeah.
Yeah, okay. Casino.com. Oh no, that's a different thing. Okay. Yeah. Well, one to go and check into then. It's quite useful. So.
Yeah, and something else I picked up was really privacy coins were really going quite high in these last 2 weeks or so. Yeah. Monero, Dash. It's quite interesting, and then what it came this last week was as well that the Dubai, I think was the Dubai FCA, Financial Services Authority, prohibiting privacy.
Yeah, I just noticed. I think there's an argument that they haven't actually banned them though, because I just saw this thing that says it bans privacy tokens,
like Monero and Zcash and so on.
Yeah. So, the FSI, okay.
Yeah, because of a lot of people can see that there is a much bigger scrutiny. Yes, they try to hide what they have for whatever reason, right or wrong. Okay. They can debate a lot here, privacy and right to privacy and all of that.
Well, this is where it comes back to what Ray was talking about before about things like MLROs or money laundering responsible officers, and there's always an issue with privacy coins that if you can't trace where they've come from, how do you do source of funds or that kind of thing? So, okay. And so Dubai's launched their new crypto framework account tokens. Okay. Another interesting one then. But I thought I saw somewhere where they were saying that they weren't banning them. Let's just see. Oh. It was on Reddit. So I'll leave that one because Reddit's a fascinating thing.
Because look, if let's say you set up a bank account in Switzerland, yeah?
Mm-hmm.
Because privacy, whatever you want to call it, you are entitled to privacy there.
Uh-huh.
Nobody knows that you have that money there, right? For whatever reason, let's not discuss criminals. Yes, they use whatever. Yeah, but in crypto, everything is being pushed. Yeah, for you not having the ability to have the same like having an account in Switzerland, for example. Yeah, and that raises a lot of questions. Is it good? Is it bad? Should all be like that? Should all the banks be forced to do the same thing? So we're going to see a transition more and more to digital assets. I think the world is going to be a world of stable coins. So maybe it's a good thing, all of this transparency,
Yeah. And it's interesting, we were talking about that before you joined as well, about how stablecoin adoption by institutional investors, institutions, not just institutional investors, might well lead to more of an acceptance of crypto in general. And that then in itself leads to more adoption. So it could be a good thing.
Yeah, of course. UBS this week announced, what was it, for their private banking clients, crypto investing services for them. And now that is quite big, to be honest, because they were not very friendly in the past towards Bitcoin and so on, but it looks like they became quite unfriendly now.
Well, yeah, I mean, certainly we've got it here where it's saying UBS will offer Bitcoin trading to private clients. Yeah, so that is quite a shift.
That's really...
When likes of UBS allow that for presumably ultra-high net worths or something. So focusing on spot Bitcoin and Ether. Yeah.
Yeah. Okay. I mean, you can start to see all of them moving. Visa, the same thing. So Visa is working very, very fast, to be frank. I didn't realize they were going to go that fast, but it's to integrate stable coins into their existing payment systems.
Okay.
Now think about what that means. So they're going to rely more and more on stable coins. That's what they are predicting, and I think that's what's going to happen. There's a lot of organizations already buying stable coins from very big OTC desks as well, and they move the money that way around the world because they pay less instead of sending a bank transfer.
And I guess as well, if they adopt the transparency that stable coins can potentially offer, that does make the role of the MLRO and of doing KYC, AML, traceability and all that conceptually at least simpler, which should reduce costs even more. So it does sound like it could be a good thing. But I don't know, Ray, is this something that you've noticed or heard about? Or
yes, I mean, I think stable coins for the banks is something they can really get their head around. The innovation in the payments world and costs really have grabbed the attention of obviously banks. In terms of, you were talking about MLROs and the financial crime programs of these regulated institutions. The better you are at in promoting your program, the less scrutiny you'll get from the regulator. So it's a sort of chicken and egg. Do you go into the market and then fall foul, or do you go slowly, touchy-feely, learn as you go, or do you bring in probably maybe potentially expensive people who think they know how everything could work and develop the so-called gold standard of the bank program? Banks notoriously are poor at financial crime. One, because of lack of understanding by people in senior positions, because they're too busy making money and don't want the speed of making money to be slowed. Lack of investment systems, etc. But in the digital world, and I think everybody laughed in a meeting where I was at, one of the most rewarding careers is probably to be a fraudster, because no sooner has institution A thought they've cracked it, you find a way to do something else to get round it. And so, it's a forever shifting dynamic. But if the asset is more stable, to use a phrase, then it does make a program easier to, one, build, and two, to educate the regulator of what it is, how it works. And then you would see market adoption.
And it's interesting as well what you say about fraudsters. I've always argued that if you look at innovation in different industries adopt technology and innovation at different speeds. And I've always argued that the fastest moving industry to innovate is criminals, because they've got, I'm trying to remember the dimensions that you get.
Motivation.
Well, they've got no regulation. Low cost of entry,
motivation,
low barriers to entry. Sorry, high level of innovation, low cost, blah 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 type thing. And then at the other end of the spectrum, you've got insurance companies who've got very low risk tolerance, very low innovation. Investment banks, commercial banks, retail banks, all this kind of thing. There's a whole spectrum of willingness to try things or not, for fear of it going wrong in some way. So,
like Barclays read this in a different way. You went, I don't know if you guys read it last week, a few weeks ago. They bought a stake in a stablecoin settlement company called UBIX. UBYX. It's a US stablecoin settlement company. So Barclays, so UK is changing as well, slowly, but they might not develop the technology or the service, but they might acquire or start to buy.
Well, that's sometimes the thing, isn't it? You either do your own in-house innovation, which tends to be a contradiction in terms, or you acquire another company or something that has done it, has tried all the hard stuff. So yeah, you're absolutely right. Barclays invests in UBIX, so that's certainly a good announcement, because it shows that they are definitely adopting those kind of things.
But when was that published? Do we know?
They don't put on dates, do they, on these?
I think it was the first or second week of January, if I'm not mistaken.
Okay.
So I think, going back to what I said earlier, I think there is a momentum building, albeit strategically, and perhaps some people miss these announcements. But the big banks make their monies by either originating securities, trading, payments, custody. These are the big money earners. So, if you're going to see a downgrade in your revenue from the traditional finance world, then these large institutions must be looking at how do we sort of hedge our position, as it were, at a timely rate where we're not in at the beginning, but we are there and the market is climbing. And so I'm not surprised to see Barclays doing something like that.
Yeah. I just checked.
Banks will be doing it, I guarantee.
I just checked back. The date on the article from Reuters was 7th of January. Yeah. So exactly as JT says. Yeah. Okay. Well, there we go. We're going to have to finish now on some interesting stuff. So, JT, thank you as always for bringing that back. Because I thought we were going to finish early because there wasn't much happening, but actually there is. So thank you all to everybody for coming along. Speak to you next week, hopefully. Have a great week.